Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, October 8th, and this is the weekly market update. So I'm going to go to this format where I just do a couple minutes of editorial or discussion and then get into the slide deck. I think the big thing to talk about this week is the OPEC cuts, if you will. The OPEC Plus organization decided to cut their production by 2 million barrels. It's not really a cut to production because the member states, for the most part, were not producing up to their quota already by an amount of about 3.5 million barrels a day. So as we've talked about before, as we were coming out of the pandemic, OPEC was adding to the amount production quotas starting back like 6 or 8 months ago, adding like 500,000 barrels a day to the quotas so that member states could, increase their production. But the problem is that most of them, with the exception probably of the Saudis and Emirates and maybe Kuwait, weren't able to take advantage of that. So we had this news being put out or promulgated that production quotas were going up, but the actual production wasn't happening. So this, to me, yes, it's positive for the oil markets in the sense of, when I look at these markets, as I've said before, I think in the short, medium term, they're mostly driven by liquidity and sentiment. And I think we're starting to see a sentiment and perception change of the oil supply. People really weren't paying attention to the fact that the Saudis were already or the OPEC was already underperforming the quotas. And now this kind of really brings it to a head, though. It really brings it to people having to think about it. And so, again, we have all these plates in the air. We've talked about this repeatedly, all these different supply and demand dynamics that are at play and that are ebbing and flowing. But I think, we're going to talk about some things in subsequent slides that everything to me is skewing to less supply and eventually more demand, or at least demand not falling as great as supply is going to fall. The big narrative in the market is we're going to have a recession. It's going to be a bad recession. And then the recency bias that people think about is back to 2008, or they think about 2020, what happened in the oil market when the pandemic shutdowns happened, and then they think to 2008, and then we're going to have this collapse and in the oil price, and we're going to go down to $40 or $30 a barrel. I'm not discounting that. The chances of that happening are not zero. Anything can happen, as we've said before, but I don't think they're as high as some people think, because we're in a different market now. The underinvestment now, the decade of underinvestment has really caught up with us. And as I've said before, if your supply is dropping faster than demand's dropping, the price still goes up. And when it comes to demand's not really dropping off as much as people think. I think a lot of people in the West just focus on the West. They don't understand that the majority of the population of the world, especially in emerging markets, especially in places where energy is still, demand is growing, are in Asia. And a lot of people ignore that to their detriment. You can't just focus on what's happening in the United States or in Europe. Okay, you have to look at the rest of the world and the 6 billion people that are in Asia and Africa and these places that are developing where energy is increasing. I mean, just saw last week, for example, these people want energy security too, and they need energy to develop. That's kind of their, mission. And so, you see a place like Bangladesh with like 150 or 200 million people. The country had blackouts this week, okay, because of the lack of, power. So you can't ignore that. And so what I'm saying to you is that, people ask me, these things ebb and flow, sentiment in the markets, liquidity in the markets, the overall market drops, most stocks are going to be weak. We've talked about this 100 times. But the thing I've always been watching is inventories. Inventories continue to shrink, and we'll talk about that. So that's what I look at, because it's inevitable that the world is based on, this hydrocarbon energy system that we've created over the last 100 years, and to replace it, I'm not saying it can't be replaced, but it can't happen in a short time frame. Somebody put up a slide on Twitter this week, I believe. And I don't know if the numbers are exactly correct, but it gives you a sense. We've probably spent in the last 20 years worldwide something like $3 to $4 trillion on renewables, and our use of fossil fuels decreased from 82% of the energy mix to 81. And so that would indicate to me that we'd have to spend, hundreds of trillions of dollars that we don't have if we want to do this transition in the way that's being advertised by the political class and, think tankers and all this other thing. So, um, I'm looking at, you saw what happened after these cuts were made. I think more could come. Uh, we're in a situation now where, even the Saudis, they're trying to build this. MBS has these visions of building this $500 billion city in the desert in the Emirates, and these other people, they understand they have a finite resource. So they're trying to do things so that they can have a post-oil economy several generations from now. And, that's not going to pay for itself. The other argument is that, and I'll get into it when I show some more slides. I just wanted to touch on this. I don't really know. I'm not privy to what was discussed at the meeting. I would say it was a pretty important meeting. The 2 million barrels that came out, I think, surprised a lot of folks. A lot of people were looking for like 1 million, but it's 2 million. That's pretty significant. If you're running, like we said before, in these commodity markets, everything's at the margin. So if you have 100 million barrels of demand a day in the world, and you basically say you're going to cut by 1 or 2%, because remember, they were already underproducing the quota. That can materially affect the oil markets. And so that, on top of the other things we're going to talk about or have been talking about, I think give a bullish bias. Now, the view is that, well, if oil prices increase too high, that the economy could be affected and we could go further into recession. So they're shooting themselves in the foot. I mean, this is, I don't think oil prices are going to go to $150 a barrel based on this cut. We're going to have this spike in oil prices because of the policy decisions made by politicians, by oil company executives, state oil companies underinvesting because of market signals on price that were given to them, because of what happened with the shale revolution driving prices down, because of the zeitgeist that's currently manifested itself specifically in the West to demonize hydrocarbons, all the things we've talked about in the past. Okay, let's get into the slides, but we'll talk a little bit more about this in a minute because I want to point out something that kind of plays into this a little bit. Hold on a second. Okay. All right. Weekly market update for Saturday, October 1st. Again, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not an investment advisor. I am not qualified or allowed to give you personal investment advice. People do ask me for that occasionally. I can't do it. I can just talk in generalities. If you subscribe to the newsletter, I can tell you what I'm doing in my portfolio and where I think some opportunities are. So that's available also. But, do your own due diligence. It's your money. It's your responsibility. All right. So getting back, I meant to put CNBC. Anyways, a CNBC journalist, I think her name's Hadley Gamble. She covers energy markets. This was the post announcement press conference, and I'll put a link to it. I need to still figure out the technicalities how I can play these videos while I'm while I'm on, because sometimes if you don't hit the right button, you can't hear anything. Anyways, I'll put a link to it, but I think it's interesting because it goes back to something I've talked about before that I think is a long-term thing that we need to look at vis-a-vis energy. And that is that the world's changing. If you can't see that, you just see, I started talking about that, and some people maybe can't wrap their head around it, but the old world order of the United States dictating to the rest of the world what's going to happen, the unipolar Anglo-American hegemon, that's crumbling before our eyes. This is another example, in my view. This is my opinion. Do I want to see that happen? Absolutely. I'm absolutely for a multipolar world. I'm tired of the United States and what it does around the world. And you know, you can hit me up in the comments. I'm happy to have that debate about you know, I'm still waiting for the weapons of mass destruction. I'm still, you know, the Gulf of Tonkin incident, the Kennedy assassination, the USS Liberty, you know, the USS Maine, you know, all of these things, Pearl Harbor, you know, all of these things, 9/11, you know, I mean, it's just too sketchy. And all these things, you know, to get us into these wars and for us to go around and dictate to the rest of the world what to do, you know, this rules-based order that we have, you know, uh, put onto the rest of the world, which basically no one understands what it really is, except for anything that benefits the United States, everybody else has to do. Those are the rules. And so I could get into all kinds of side things. I'm not going to do that in this video, but that's my view. And the rest of the world's tired of it too. And I've talked about that. You know, these countries are grown up now. They see that the United States is a paper tiger. There's no leadership here. There's exhausted, you know, lack of out of the box thinking in Europe and the United States. It's just trying to ram the same policy, unipolar, the United States, you know, Anglo-American hegemon, you know, you do what we say or else. And, you know, people are throwing off that yoke. And I think this is part of it. And what's funny is this reporter, you know, she has access. She knows all these people. And she goes on her little Karen rant here about, let me just read this tweet here. OPEC chiefs clash with USA journalists over huge cuts to oil production. She accused the organization of trying to, quote, hold the world hostage, unquote. And the announced production cuts were, quote, an aggressive move, unquote. Saudi energy minister, I don't remember his name, but he responds to her in this video very calmly. First, he says that these are, you know, kind of laughs a little bit. Chugs is kind of provocative. But anyways, you know, he goes on and says, show me where is the act of belligerence, period, unquote. And so I don't know why they cut this. I mean, they want higher oil prices because they want money. Okay, I would suggest that's probably the main reason. Yeah, and OPEC Plus means Russia's part of this. Okay, Russia has input into this. And so immediately you see the reaction in the United States, right? Senator Grassley, the no OPEC bill, we're going to sanction these countries. We're going to, the playbook comes out again. You're not doing what we want you to do. And so, you know, we've been allied with this, with the House of Saud for 60, 70 years. And so now they're not doing what we want them to do, what's in our near-term benefit or these current administration's benefit. And so we're going to start threatening everybody. Well, people realize that the United States is a paper tiger. What are you going to do? Put sanctions on us? Are people paying attention to what's going on? Okay. India, China, Brazil, these people, when they had the recent vote at the United Nations, they abstained. That's as good as saying they didn't agree with the proposition that was being put forward to, you know, and then this, you know, idea of kicking certain countries off the Security Council and things like, you know, we have a rogue government. That's not just this administration. It's the last, you know, half dozen administrations at least, or even going further back. The unipolar world where the US dictates what you will do or else is crumbling. And so you get these people like this come out and do this Karen thing. Well, oil prices are high in the United States, and we have this energy situation. And what are you doing? Go back to, again, the Charlie Munger quote, okay? People are going to act in their own self-interest. If you want to know why people do make the decisions they want to do, look at how it benefits them. What's their interest? Okay, so why would the Saudis open up the taps now? Okay, MBS is a different leader. Okay, he sees where things are going. Okay, people in OPEC see where things are going. Okay, and you know, don't be surprised in the next year or two if you don't see the Saudis join the Shanghai Cooperation Organization, make a bid to join the BRICS. Okay, this is what's happening because that opens up more possibilities for them instead of just being a vassal state of the United States. And so the Karen stuff comes out. You should listen to this, because the snotty little attitude that this person has, she has no clue what's really going on. So what if they're trying to hurt the United States? What can the United States do to Saudi Arabia? Well, we're not going to sell them any more, allow Boeing to sell them any more jets. We're going to come up with this NOPEC thing. We're going to bring antitrust situation. You know, OPEC controls production of about 47 million barrels a day of world oil production. Okay. You know, you need to really think about what happened during the, Arab-Israeli war, when they had the oil embargo from the OPEC countries, the Arab countries, what happened to oil prices. You know, when you need energy and you don't have energy, I hate to say this, but the person that, pays the piper calls the tune. And the Saudi oil minister kicked it over to the OPEC minister, and he said, listen, energy security has a price. Again, we're back to that same term, energy security. So poor decisions, short-term thinking in the U.S., ridiculous policy decisions around climate change and this transition to whatever they're trying to transition to, zero carbon. Okay, this is what you wanted. I mean, they're lucky I'm not sitting there. I would have said, well, this is an opportunity for you to go full whole hog into your energy transition. That's what I would say. And the problem is that, all these bad decisions, then when energy prices, because there's a lack of investment, people can see what's going on. Okay, this is what they sell: oil. They're self-interested in selling oil for as high as they can get it, price they can get, and have a balance such that they get a high enough price to meet their internal budgetary means and what they're trying to do, and still not have it go high enough to destroy demand. That's what they do. And there's not much, just think about it. 3 or 4 years ago, Russia and Saudi Arabia were in a production war where prices crashed. Do you remember that? Okay, Trump called them up, and they, that was the double clutch that we had when we first became bullish on oil. If my long-term listeners remember, we were bullish on oil, and then Trump went over there and did a double clutch and got the Saudis to basically get into a war with Russia on price. The price collapsed. If you remember, that was just 4 years ago. Now we're on the opposite end of this. So energy, this goes back to, I'm jumping around a little bit. This goes back to what we've talked about before. If you don't have energy security, if you don't have secure energy, then if you don't have a realistic and long-term energy policy and plan in place in your country, this is what you're subject to. And so you can send your Karens out, but they responded very simply. They don't care. You're going to pay. That's it. What are you going to do about it? Not sell us any more Boeing airliners? Okay. I don't think that'll happen. You don't want to sell us any more weapons? We'll buy the weapons from Russia. We'll buy the weapons from China. This is a different world now, guys. This is not a world where the Anglo-American hegemon can go around and intimidate everybody. You want to cut us off from SWIFT? You want to impose financial sanctions? They're talking about doing sanctions on some of these countries now. This is going to expedite the transition to this multipolar world, to the multipolar financial world. That's my opinion. So I think this is very important. This is just another brick in the wall for that thesis. Is it actionable right now? Yes, energy is going to be more expensive going forward. That's it. Stay long energy. That's my advice. Here we go. Here's your inventories. I put these up whenever I see them. People post them. So you have, various years here, 2019, 21, 22, then the 5-year average in the band of the, in that average. And look where we're at. And we're still declining. This is crude oil, including the SPR, plus gasoline and distillates. What's that tell you? Supply is going down. As long as supply is decreasing, the price is going to, unless you have this Great Depression 2.0 where demand drops off, remember, I keep pointing back to this, if the world's at, pre-pandemic 98, 99, whatever it was, million barrels a day, and we locked the entire world down, we only dropped demand by 8 million barrels. It dropped to 89 or 90 million barrels a day. I mean, I don't see them locking down the world again. Okay, so even if you have a recession, and I've pointed this out in other slides, even over the last 50 or 60 years, there's only been a couple times, notwithstanding the pandemic, where oil demand has actually decreased, like only a couple, 2 or 3 years out of the last 50. Okay, it's a steady increase because why? The ascension of man, because all those billions of people in Asia. Okay, if you're just focusing on what's happening in the U.S., you're going to miss what the big trend is when it comes to this energy. Okay, and they're not interested in having a zero carbon economy. They're interested in accelerating the wealth in their countries, getting people's standard of living up. And the quickest, fastest way to do that is to do what we did: use hydrocarbons. It's that simple. Does that mean that they're not putting, rebuildables up? Yeah, they're putting rebuildables up, but it's not going to be, this idea that oil demand is just going to disappear over time. That's now the narrative again, right? Well, oil demand is going to slowly but surely, these are stranded assets. There's no reason to invest. This is part of the problem of what's going to exacerbate this energy crisis. But here it is. This is, here in the US, this is what I focus on. As long as I continue to see this, uh, I don't know why you would, if prices drop for some of these energy stocks because people, the sentiment changes short term and you get a sell off. I mean, I think you got to get long, right? You got to top up. Here's another example: jet fuel. Okay, well below the 5-year range. So a lot of these products are well below their 5-year average, and we're supposedly in a recession, and definitely in a recession, if not depression, in Europe. I saw a report this week that some people were forecasting in Germany a 10% decline in GDP. 10% decline in GDP. And we'll talk about what's happening in the UK. These are like depressionary numbers. This is going to get ugly. So, but anyways, but supply is still dropping. Why? During the pandemic, we shut down 5% of U.S. refining capability. Now, there expansions go on. It's not like this. It's kind of a canard to say that there's been no new refineries. Yeah, there's not been a greenfield refinery. I think there's one small one up in Superior, Wisconsin, but I think it was after they had a fire that destroyed the previous one. But anyways, so suffice to say, these companies do additions and stuff to increase slightly their run rates, but overall refining capacity in the U.S. is down. So if demand is still there, then the refining has to happen somewhere, and then you have to ship this stuff around, and there's not necessarily enough to go around, and so you see this type of situation. And supposedly, the U.S. is in a recession or close to being in a recession. Europe's definitely in a recession or depression, and China still has the COVID lockdowns going on. So these are major demand declines or restrictions or pullbacks, and yet we still see supply. So what happens when these things come back? That's the problem. That's the thing that you really need to be focusing on. If you already have inventories coming down, and we, eventually these things are going to turn around, right? These negative demand drivers turn around at some point, and then that's how you get to $200 a barrel oil. So here's the CEO of Occidental Petroleum. Links to these articles in the show notes below if you're curious to read this. I just take snippets. I don't want to skew your view, so feel free to go look at the articles yourself. But anyways, this was a Zero Hedge article. It said, "World risks living with oil shortage for a while," warns Occidental CEO. Again, you have to take this for what it's worth. This is a CEO of an oil company, so they're talking their book possibly, but it lines up with a lot of things we've said. So from the article, Buffett's aggressive buying of Occidental comes as CEO Vicky Holub warned that a massive gap between supply and demand for oil had been masked by historical releases of the Strategic Petroleum Reserve under the Biden administration. Bingo, that's what we've been saying. And that's finite, guys. That's a major, you talk about a 2 million barrel a day drop in the quota for OPEC. And then, you have this basically anywhere from 800,000, 1 million barrels a day being released from the SPR, whatever it is, 500,000. It fluctuates, but suffice to say, somewhere in that range. And that is supposed to stop at the end of this month. This has all been done to hold oil prices down. Remember, it only takes that's 1% of world demand being released every day. Okay, and this dumb stuff about, well, it's going to China. It's, well, guys, we don't have the different crude. Oil is fungible. Okay, so if you put more crude onto the world market and it exceeds the demand, price should go down, right? Because it doesn't matter where it gets refined. We don't have the refining setups to, like in many cases, refine the oil that we produce in the Permian. It's light oil, so we ship that overseas. We bring heavier crudes in. That's what the refineries along the Gulf Coast are set up for. It's not like this is not a conspiracy against, you see, these some goofballs say, well, we're sending this oil to China. I mean, look, they're putting it on the world market. Like I said, if you can change the dynamic a percent or two, you can really affect the price on a commodity. So that's what they've done. They've tried to put that 1,000,000 barrels a day for the last, whatever it was, 6 or 8 months on the world market to try to hold down that price. Because I can tell you right now, without those SPR releases, oil would already be at $150 a barrel. And so this is what the CEO of Occidental is saying. So people are saying what we've been saying for many months. Okay, we know this. We understand how these commodity markets work. So here's what she goes on to say, quote, the lack of supply will continue to manifest itself as China starts to open up from COVID, unquote. Holub explained in an interview on the sidelines of the Energy Intelligence Forum in London. Bloomberg quoted. She warned the world is at risk of, quote, living with a shortage for a while, unquote, that will send prices higher, adding the lack of supply will become more evident in the first quarter of 2023. Now, I think the Biden administration did say that they're going to continue to like 10 million barrels into November for releasing, but there's still a lot of oil left in the SPR. So I think if, I don't know what they're going to do. I'm not privy to what they're going to do. They haven't announced any more releases beyond that November timeframe, but that's another 1,000,000 barrels a day that could come off the world market. That would be 1% of world demand. That's enough to allow oil prices to go higher, substantially higher. So you have that. You have the fact that, China, I mean, I really don't know what's going on in China. I'm not a China expert. I don't know why, in the face of what the rest of the world's doing, why they're continuing this lockdowns. Their lockdowns are resulting in lowering of oil demand by about 2 million barrels a day. You add that, now you're up, you take the SPR plus those 2 million, that's 3 million barrels. You look at fuel or gas to oil switching in Europe and other places, won't be just Europe. I mean, I've talked about Pakistan, for example, cannot bid any LNG cargoes to their country because of the fact that they're being outbid by Europeans that can just, print as many euros as they want. Well, for right now, and outbid these emerging markets. So that, if you have a business there, you're going to get a diesel generator and you're going to run it, right? If you have blackouts because there's not enough power in Pakistan. So people adapt and overcome, right? So you're going to have some of that gas to oil switching, which could be anywhere from 300,000 barrels a day up to I've seen up to 1.5 million barrels a day. So you could add that. You could be in a situation by early next year where it's conceivable that you're going to be short 4 million barrels a day. If you're short 4 million barrels a day, let's say everything skews right in our, like I've just laid out. I mean, you're going to be at 200. You're going to the price will have to ration the demand at that point. And so you can see a quick move up to $150, $200 a barrel. Yes, then the economy would, what would happen is the economy would contract massively, you'd go into a massive recession, and oil prices would drop. I don't know what's going to happen. Right now, at the current oil prices, the companies in the Actionable Intelligence Alert newsletter continue to pay down debt, continue to increase returns to shareholders. And so, we're happy campers. It's happening just like we thought it would, like we've been talking about for over a year. Since the bottom, we were buying a lot of these companies and making the big bet, at the, negative $47 low, whenever that was a couple of years ago. So basically, I'll continue to say it, I use these little quips because I want to stick in people's head. The thing about heads we win, tails we win more when we're talking about rebuildables and the fact that the hydrocarbon economy is not going away anytime soon. But we also, want to say that we're going to benefit from these poor decisions that are made. And so many of these things cannot be fixed very quickly. That's why you have, for example, the Biden administration is really flailing around now. So if you didn't see in the news, I didn't put it up here on a slide, but I'll just mention this. So they're trying to renegotiate the deal with Iran. But why would Iran be interested in helping the U.S. at this point? Okay, they are going full in on the SCO with the other countries, and they've lived for 30 or 40 years with sanctions. They can go another 2 or 3 or 4 years. This helps them. Okay, and so they eventually, they can sign deals with other countries, China and stuff. They'll get their oil out. So I mean, and so you have the Biden administration, they went over there and tried to get that deal. It seems like it fell apart, the nuclear deal. And so now they've issued told Chevron that they can recommence their operations in Venezuela. So there is no policy. It's just, if somebody would tell me, well, there's a policy to do this. Yes, there is. And there's an article I'm going to point you to where a guy wrote a 35-page thing on Real Clear Energy about all of the dumb decisions now that have cumulatively got us into this point, which is, I think, a great read to really understand. I mean, everybody knows about Keystone pipelines and canceling offshore leases, but there has been a plethora of things behind the scenes that this administration and previous administrations have done to submarine and to take out our energy security. So yeah, you're short of molecules. That's what I've said. That's another one of my quips. The world's short of molecules. And it's not hard to understand, and to steal a quip from the Doomberg guys or people, when physics and politics collide, physics wins every time. And that's why you'll see in some subsequent slides, where some of this is going, where some of the discussion is now manifesting. So this is, again, these things are actionable too. Stay long energy, buy on dips. You're in an energy bull market that's probably going to last this decade. If people want to know, well, how is all this actionable? You're saying all this stuff, but what does it mean? Stay long energy until you see this massive investment bringing all this new supply on in the cuckoo bird seat. If we have a big run up to 150 or 200, we're going to have to sell, because then you will have a worldwide deep recession. Okay, because the world can't run on 150 or $200 a barrel oil. Then you go to cash and then wait to buy on the dip. But that's down the line. So anyways, let's go here. So what are some of the second and third order effects that are happening from this self-inflicted energy tourniquet that's been put on by the ruling class in Europe? Here it is. UK companies collapse at fastest rate since financial crisis as energy bills soar. So it's happening. It's happening like we discussed. Regular working people who I care about. I don't care about the elites. I don't care about their stupid foreign policy. I don't care about their McKinton, Eurasian landmass and the great game. I don't care about any of that. Real people are being killed. Go back to that scene in The Big Short when the two guys running the garage band hedge fund are high-fiving about all the money they made on their selling their CDSs, and the Brad Pitt character turns around and starts scolding them about, what that really means. Every 1%, I don't know if this is true, but it makes sense. Every 1% decline in GDP results in 40,000 deaths. Why? Despair, drug use, suicide, depression, all these things, right? And so what's happening in the UK? This is not just the UK, this is all over. I just keep pointing these news snippets every week to bring it to your attention of what's really happening. UK companies are collapsing at the fastest rate since the height of the global financial crisis, as surging energy bills drive thousands of firms out of business. People work at these places, real people, regular people that have no really idea of how the financial markets work. And, this is why I really like, I don't know if she's going to be able to make a difference, but I like this Georgia Maloney when she's talking in her speech about, some of the things she's talking about, and this thing about the financial speculators and these people that, just the elites, what I call the pointy shoes, the Wall Street, masters of the universe, they're going to continue to make money. I just saw that one of the trading houses, I think it was Cargill or something, they've had record profits this year trading on, the dislocations in the agricultural markets. What about these regular people? Guy who owns a regular business with 2 or 3 people working there. Or they got a little heating business or, cabinet making shop or whatever it is, out of business because they can't afford the energy bills. What are they supposed to do? Everybody's just going to go on the dole? UK is bankrupt like every other Western country. The article continues. There were more than 5,600 insolvencies in England and Wales in the second quarter. That's just in one quarter. Highest level since 2009. That's right after the financial crisis, according to the Office for National Statistics. The sharp rise in energy bills was cited as the biggest problem for businesses, while difficulties paying debt, rising costs of raw materials, and supply chain disruptions also take their toll. You've seen on Twitter, you've seen on social media, the people burning their power bills, gas bills in Italy, Greece, the UK. That's spreading. You're going to see it on alternative media. They're not showing it on CNN or Fox. Everything's wonderful. Everything's great. We got a plan. Just trust us. Ursula von der Leyen, Robert Habeck, Annalena Baerbock, Olaf Scholz, Macron. They all have a big plan. They know what they're doing. This is not going to hold. The center's not going to hold, folks. Okay, and we're not even into the winter yet. This is going to. I can't forecast what's going to happen, but I can tell you that there's going to be breaks in the political. You look at a country like Hungary. Hungary is part of the EU and NATO, but it doesn't have the EU as its currency. Okay, it has made a deal with Russia. It's going to get its gas. You have other governments are going to start doing this. You cannot sit there and have this continue to go on. Now, Liz Truss, she doesn't strike me as a particularly bright person, but she has said some things that probably should have been said 10 or 15 years ago. Increase the production of natural gas and oil in the North Sea. Accelerate the building of these nuclear plants. Exploit the onshore shale gas reserves that the UK has. Now, I don't know if they can. I don't know if it's geologically possible, but that's stuff that should have been happening 10 years ago for energy security. But people didn't do that because it was easier politically to kowtow to 0.1% of very vocal environmentalists and just get your gas from Russia for cheap. So that was the easy decision you make politically. So I think the things are going to swing back the other way, as now people normal regular people are not really interested in politics because it doesn't really, they're apathetic because they feel like it doesn't really affect their life, but it does now. And so I think you're going to see the protests increase. You're going to see repression by these governments increase. You're going to see more control of social media. You're going to see people that are dissenters or people that try to talk the truth kicked off social media, marginalized, but you can't do it anymore. It's not like, in watching these movies about East Germany where every typewriter in the country was registered so they could, the Stasi could figure out if you were making flyers, anti-government flyers, they could trace the type back to your typewriter and throw you in prison. You have Odyssey, you have Rumble, you have Gab, you have all these other alternative, unless they're going to shut down the internet, you can't do it. What are they going to do? Confiscate all the mimeograph machines? I mean, it's going to get out there. And people are going to thirst for this knowledge. People know that the sheep are waking up, let's put it this way, that they are being corralled into the slaughterhouse. This is interesting. This is what I've said before, circumstances have a tendency to, especially if you're a politician, you're mostly interested in staying in power. And so I think we'll start to see over time some of the shibboleths, some of the belief systems crumble for political expediency. I've quipped before and like to bring it up that during the 2008 lead up to 2008, the financial crisis, when oil prices got to like $147 a barrel, something like this, that even Nancy Pelosi was talking about resuming drilling offshore California. Now, it never happened because prices came down, but this is what you start to see because people, like I said, the political class starts to get nervous that, hey, if we don't start doing something or at least saying something, remember, there's other parties involved here. You have not just the Green Party in Germany. There's all other parties, and there is a split in Germany. You know, people in Eastern Germany don't have the same standard of living as people in the West. Even still, they have that legacy of understanding the BS from governments because they lived under the East German, you know, communist type situation, and so they have. That's why you see like a party like AFD is a little bit has higher participation in eastern parts of Germany. So I'm not saying you're going to get this big sweeping because the German system isn't really set up for that, but this is interesting, I think, what you're starting to see. But the surest evidence that Europe's largest economy is veered into signs and wonders territory is that politicians are uttering with increasing frequency that dirtiest F word of all, fracking. Germany's energy crisis is a crisis of choice. That's correct. It is a crisis of choice, or rather a crisis of two choices, the second following directly from the first. But Germany is as dependent as it is on foreign fuel only because of the first decision Berlin made, not to tap the country's substantial domestic gas reserves, which by some estimates could satisfy much of Germany's gas demands for the next 2 decades. Berlin in 2017 all but banned on dubious safety grounds the fracking techniques that could reach most of Germany's gas. Now, I don't know, again, I'm not a geologist, I haven't studied. I know there's extensive amounts of shale gas in Europe. I do remember like maybe 10 or 15 years ago, even in Poland, they tried some of these techniques. It wasn't geologically prospective to unlock these things, but there are resources there. There are, you know, I want to say them reserves because they haven't been proved up yet, but there are potential resources there. So it's just interesting that this would even be discussed. This is what starts to happen as the political class starts to, you know, freak out. You know, they said they're going to extend the life of 2 of the last remaining 3 reactors in Germany till April. That's what Habeck said, I think, last week. So, you know, we'll see. We'll see what happens. We'll see how much the common people are going to put up with. And, but, you know, the other thing that I did see was that Gazprom did say this week also that there's actually 4 lines. There's 2 lines on each on Nord Stream 1 and Nord Stream 2. And I guess whoever blew it up didn't hit one of the lines. And so Gazprom said that it's possible that one of the Nord Stream 1 lines is still serviceable, which is interesting to me. So we'll see what happens politically. You know, that could be something like 25 billion cubic meters of gas, which would be, you know, wouldn't solve the problem in Europe, but it would go a long way to helping them. And we'll see what happens over time during this winter. You know, it's not just the winter and heating, you know, it's the industry. This is what I was explaining to somebody else the other day. We were having lunch and they were like, you know, I took the napkin holder on the table. I said, this is the economy. Assume this napkin holder is the you know, a country's economy, the world economy, what have you. And into this economy, to keep it at its level that it's running at currently, with all the things that you take for granted, running water, hospital services, the space program, the server farms that let you play your little games on your phone, all these little things that are going on in the background, okay? The ability to commute from a bedroom community 40 miles to downtown for work on a freeway. All of these things require a set amount of continuous energy inputs into this system, this very complicated, advanced, complex system. And if you start pulling or reducing the energy inputs into that complex system, the complexity begins to break down into simpler things, which are going to reduce a lot of these things that are happening that you take for granted. And it started to dawn on this person. And it's going to start dawning on these people in Europe, the regular working person. I'm sorry, we're closing the business down, this glass manufacturing plant, because we don't have enough energy to run it. You know, the energy costs are so high that the products are not competitive. Bye. And they'll never open that plant again. This is what happened in the US, and it wasn't because of energy. Just gutted out the entire industrial base of the country when we sent all the manufacturing overseas. And yeah, it benefited people on the coast. It benefited people with, you know, that went into the service economy, people that had advanced degrees. It didn't benefit blue collar workers. Like I've said before, I've driven through and worked in these communities in rural Rust Belt areas which were decimated and have never recovered. The people have never recovered. Now, maybe everybody in Europe will just take that and, they'll learn to code. I don't know what the plan is there. Or maybe it's part of the, depopulation agenda of the WEF. They're just useless eaters. We don't need them anyways. I don't know. But I would suggest to you that, if you're going to do something like that, you should do it over like decades, not in one, big move like we're doing right, like it's happening now. Not that I'm suggesting, this energy thing is some, thought out policy. It's just how it's working. People are going to get mad. People are going to react. You already see the outlets that they're outletting their anger vis-a-vis the ballot box already. And that's just the beginning. And as I've said before, you're not going to make the changes that fix this at the ballot box, because ultimately Giorgia Meloni doesn't have the political capital to remove Italy from the euro. That's what needs to happen. Completely cut the euro off, go back to the lira, devalue that currency, get a competitive advantage, repudiate debt. That's not going to happen. It won't be allowed. People in Italy this stuff has to happen incrementally. The pain dial has to keep going up. And okay, it's like Liz Truss. She's in there now. If you look at the polls in the UK, if they had an election right now, Labour would sweep into power. Would they really change anything for the better? No, they start talking about nationalizing the power grid and all these more dumb policies that won't work. And you go back and forth, swinging back and forth between left and right, trying to get a solution. In the meantime, the standard of living goes down, goes down, goes down. And there's no real solutions, because the solutions that you're trying to implement are the same failed solutions that you've been trying for the last 20 or 30 years or longer. Again, here's another article. Europe has energy resources. Do they have the will? Europe's energy resources are far from trivial, with coal reserves amounting to nearly 13% of the global total, sufficient to support current levels of production for nearly 300 years. According to the European Commission, technically recoverable shale gas resources in Europe amount to some 14 trillion cubic meters, between 4 and 5 times greater than the proven reserves of natural gas. In other words, the shale gas would be sufficient to support current levels of European gas production for 50 years. But yet they're doing nothing to exploit it because, climate change. Here's a quote here. It is alarming that there are still parliamentarians who believe that more renewable energy is the solution, when this will only deepen the current crisis and make recovery still more difficult. Only the physically superior energy from fossil fuels is able to keep us out in this desperate situation. Indeed. And so, again, I look at, people in government, people enter government for one reason. The two highest areas of income, average income in the United States, are around the Silicon Valley area. And of course, the suburbs and zip codes around Washington, D.C. I went there, I don't know, a couple months ago, and I was just shocked about driving out to the airport, all of the construction cranes around Washington, D.C. The government's a growth business. And all the slop and all the, lobbying and all the money that's there, there's a lot of money there. There's a lot of, grifting going on there. And so I like this here. It's, Janet Yellen's Treasury Secretary. She's going to announce the first $1 billion Treasury loan for multilateral clean technology fund. And so this guy, Wall Street Silver, says this: a loan to help developing countries transition from fossil fuels to green energy. Then he has the clown world emojis. This is exactly how it is. I've been in this business a long time. This is exactly the app description. Lots of consultants, lots of Zoom meetings, a bunch of NGO activists funded, and a bunch of invented numbers on their effectiveness. We won't get any of this loan money back. That's exactly right. And nothing will happen vis-a-vis CO2 emissions. This is just a way for people to make money. And I explained this to somebody else the other day. This whole rebuildables industry is so large now and so entrenched in DC and in state capitals, it's not going away. There's hundreds of thousands of people, lawyers, engineers, lobbyists, all of these bugmen type people that are now ensconced in this. And I don't say anything. You know my views on it. If you want me to build ice machines in Antarctica, I'm happy to do it if you pay me. I'm not a policymaker. I'm not the king. Okay. I don't have any influence on that. Okay. But I see what's going on. I just chuckle because I occasionally can sneak stuff in there. Like when I went to the solar conference, I was bringing up about the copper, impending shortages for copper with all of these manufacturers of inverters and transformers. They just looked at me like, what are you talking about? Don't you understand this is a boom we're in? Okay, well, you don't have the materials there, chief, but I don't say that. I just see if they understand, if they have no inkling, because it's happy days are here again. And so we're not going to get rid of this. It's not going to go away. The only way this ends is the wheels have to completely fall off so that you can't do it. The currency collapses. You got bigger problems than worrying about climate change. And I think eventually that happens, but predicting that's very difficult. There's people that are perma bears that are constantly saying, eventually, the levels of debt, the levels of corruption, the levels of, stupidity in the country, and, all the other problems build on top of themselves. And then the whole thing just, like I said, the wagon wheels just fall off and you just stop. And then, like I said, that's when you really have real changes. And like I've said before, I wrote an article like 5 or 6 years ago on my website where I said that Social Security and Medicare will guarantee the political dissolution of the United States as a political entity. The unfunded liabilities are not payable. Okay. And people have known that. Ron Paul used to spar with Ben Bernanke about that, or Greenspan about that. And Greenspan said at one time, we have this thing called printing press. We will pay the benefits. I do not guarantee the value of those payments. So you know where this is going, but you can't predict what is the catalyst. What is you're floating down this river towards Niagara Falls, but you really don't know where the falls are. You know they're there, you just don't know how far. Is it 100 miles downriver? Is it a mile downriver? Is it 2 blocks downriver? I don't know. But you can see the handwriting on the wall, and no civilization gets out of this. And this is why the U.S. hegemony is collapsing also. Just can't, it's not sustainable. So this is just, everybody out there stealing as much money, getting as much as they can while it's there. And like I said before, it's not even worth trying to convince anybody, because you're not going to convince somebody that this is a ridiculous thing to be doing if their livelihood depends on them not changing their mind. I mean, people are more motivated by their self-interest. Again, we're back to self-interest again. And so this is the article. I haven't read all of it. I've just read the first few pages, but I'm going to put a link to it. It's like 35 pages. This guy gets into the whole deep down, all of the policies, all of the executive orders, all of the poor choices that have been made of why we have the energy issues. And it's all political. It's all political. All of these things could have been solved. I go back to that. Whatever you think about Mr. Trump, I think it's the schadenfreude that I get from watching him standing there at the UN telling the Germans not to do what they were doing by tying their energy security to Russia, and they sitting there laughing with these snotty little looks on their face. Well, are they laughing now? I mean, energy security is the basis of everything. Energy is a derivative of everything. If you don't have the energy inputs, you're in trouble. Are people figuring it out yet? And then you go back and look, how did we get here? Well, it's by political design. Mr. Biden, when he ran for president, went up to that 14-year-old girl and with that microphone, I'll never forget it. This is what he said. I promise you we will get rid of fossil fuels. What, you don't believe him? The policies all indicate that. Now you want to know why you're in the position you're in. So for political expediency, they're running around because, you're not really going to get rid of fossil fuels in a 4-year presidential term, but they're going to, do things to move us in that direction. And then the repercussions come because they're not thought out, or people don't understand how things really work. And so now, going to tell Chevron to go, restart operations in Venezuela, go around and threaten OPEC, pass laws, shake our fists and, send out our snotty little regime reporters to, like Hadley Gamble and, have her chastise the OPEC members. They don't care what she says. They don't care what the U.S. says. Have you ever seen, I've said this before to another person we're talking, I've said this before on these channels. Have you ever seen a U.S. president or a U.S. administration be rebuffed by OPEC or the Saudis? Like, I mean, I have never seen anything like this. You know, this relationship that we had with the Saudis for 70 years seems broken. You know, when Mr. Biden went over there last time, I think it was a few months ago, that's when OPEC made the ceremonial 100,000 barrel a day cut, if you remember. That was the result of the last visit. And he didn't pick up on the vibe, the administration. So here we are. Going on, snippets from the article. The West has experienced its third energy crisis. The first in 1973 was caused by the near quintupling of the price of crude oil by Gulf oil producers in response to America's support for Israel in the Yom Kippur War. The second occurred at the end of the 70s when Iran's Islamic Revolution led to a more than doubling of oil prices. This again inflicted great economic hardship, but the policy response was far better. This time is different. The third energy crisis was not sparked by Saudi Arabia and its Gulf allies or by Iranian ayatollahs. It was self-inflicted, a foreseeable outcome of policy choices made by the West. Germany's disastrous Energiewende, energy transition is basically what it means, that empowered Vladimir Putin to launch an energy war against Europe. Britain's self-regarding and self-destructive policy of, quote, powering past coal, unquote, and its decision to ban fracking. And as Joseph Toomey shows in his powerful essay, President Biden's war on the American oil and gas industry. So these, like I said, I'll put a link to it. I suggest you read it. I've already started reading it. It's already kind of like made my eye, one of my, that's interesting. I didn't know about all of these undermining policies that we've engaged in. And so, you know, this is we have a plethora, we have an abundance of hydrocarbons in the world. The West has decided that we're going to net zero. I don't know how you overthrow this. You see the results. Poverty, suffering. We don't even seen it all yet. Is this what you want? Is this what you voted for? Is this what you're in agreement with? I don't think the majority of the people are, but we'll see. That's where they're taking us. You heard Annalena Baerbock. She doesn't care what the German voter says. We're going to stand behind Ukraine, regardless of the costs. Okay, we'll see. Getting back to copper, you know, I keep bringing this up. You're not going to have an energy transition that's going to be successful because you don't have the copper. And we keep talking about that. And eventually, you know, even with all this recessionary talk and all the things that are happening, I think the copper price is only down to $3.40 a pound. You know, it's not, where's the collapse? Maybe it's coming. Maybe as this, you know, energy or interest rates start to bite and the economy continues to slow down, maybe we'll see this waterfall event. I don't know. But medium and long term, you know, we got a problem. From the article, annual copper demand from green energy is set to increase by over 3 million metric tons per year during the course of this decade. Actually, I've seen estimates even higher. Just looking at electric vehicles, there is 3 times as much copper in one EV compared to an internal combustion engine. You know, you could go do your own exercise. If they're going to make 100 million EVs, how much copper per EV? Do the calculation. That's increased demand. And then you go out and look, where are these mines coming from? Add to that the use of copper in EV charging stations and energy storage systems, and the demand picture only keeps on growing. Yes, and that's notwithstanding the demand that's coming from that largest population base that's emerging in Asia, just for electricity grids, air conditioners, transformers, all of that infrastructure that needs to go in places like Indonesia with 200 million people, the Philippines with almost 100 and something million people, Bangladesh, India, China's not done yet. So you go down the line, okay? So then you're going to add this additional demand of copper that is not there. goes on a quote here. We have moved into a landscape of accelerated copper demand growth underpinned by the green energy transition, unquote. Quote, in 10 years' time, 7.6 million to 11.3 million tons of new mine capacity will be required to fill the supply gap. But mining companies have been extremely sluggish in responding to this challenge. The recent drop in prices won't help, unquote. Copper demand from green end-use sectors is set to more than double its share of total usage from 2020 to 2030. I've seen, podcasts where people kind of like try to, you're like one of the largest mines in the world is Escondida, and you would need 7 or 8 more of those in the next 10 years. Well, who's developing these? No one knows, because they're not. So that is why we try to break it down to something simple to remember. Heads we win, tails we win more. What does that really mean? Well, the underinvestment in hydrocarbons that power our world, heads we win, because prices are going to be high. In the meantime, on the other side, the transition, we don't have the materials ready to go to allow for this transition to lower hydrocarbon usage. And in a ironic twist of, FU, you need hydrocarbons to have the energy transition to undermine hydrocarbons. You see, it's a circular firing squad. So heads we win, tails we win more. Like I said before, Goring and Rosenzweig has forecasted incentive price on copper of $10 a pound or more to get people moving. It's not going to happen, folks. It's not that the materials aren't in the ground. They're there. No one's investing in them. We have resources here in the US. There's big resources in mining. I follow the mining industry. Do you know how many mines, just arguing with people in Europe, they won't let mining advance there. Here in the US, it's difficult to advance. So where are you going to do this at? Places like the DRC, the rape capital of the world, which is, the place is corrupt from east to west. You have to pay bribes and have civil wars and cannibalism and all this weird stuff going on. This is where you're going to get all the world's copper, where you have child miners mining cobalt. This is how you're going to get this energy transition. I mean, I just sit back and laugh. People really haven't thought this through. And so forget about the political situation, comments, or my views on it, or whatever, or my snide remarks. The bottom line is this is the investment theme. This is the speculator's dream for the next 10 years. Again, going back to Soros, find the presumption, find the premise that is incorrect and bet against it. That's what we're doing. The bottom line is that if we want to have an energy transition, we need copper. It is vital. And judging from the level of physical inventories today, supply is already short of demand. Tails, we win more. This is interesting. I see this layoffs are happening at wind manufacturers. It says here, GE is cutting its U.S. onshore wind workforce by 20% and plans cuts in Europe and Asia, giving operating losses and steep drops in demand. Rival Siemens Gamesa Renewable Energy last week also said it planned to eliminate 2,900 jobs. So I don't really follow this as deeply anymore as I used to, but it seems like the shift is to solar because it seems to be faster and quicker and easier. And so that's where all the emphasis is. That's where the big build out is. I think a lot of this also has to do with the fact that you've really built out a lot of the prime locations for putting up windmills. So how much demand is there onshore? You can't just put them everywhere. They don't financially make sense if they're in areas where there's not sufficient wind. And that's mostly in the center of the country. So they've got most of the prime locations locked up. And so, yes, there's demand for, doing these repowers and stuff like that, but that's, 10-year cycle. That's not enough to maintain the big boom that everybody was having. So that's why everybody's moving into solar now, because that's the new thing. Everybody's hanging a shingle out. So I thought this was interesting. We'll see if how this goes. But again, I continue to put these things up here. My snide remarks notwithstanding, or some of my political views that people don't agree with, which is fine. I mean, I have my views, you have your views, but you can't get off the fact that when physics meets politics, physics is going to win every time. And so that's what we are focused on here. Again, we just published the October issue of the Actionable Intelligence Alert newsletter. We again beat the S&P 500. I think since I started tracking everything from January of 2020 to now, the S&P is up like 10 or 15%, and the portfolio is up like over 150%. Now, it depends when you get in. People that have been with me a long time have done better. People, you get in over this last 3 months, and you come on board and you're like, well, nothing's happening. Well, it's like things are not linear, guys. So we had this lull, we had this pullback because sentiment had shifted away, that we were going to have this Great Depression 2.0 and energy prices are going to collapse. Then we had, sentiment changes then, and we had this big rally last week in energy stocks. And like I point out in the newsletter, I just stay on track. Like in, going after the Death Star, man, stay on target, stay on target. I mean, as long as inventories are declining, it's irrelevant what happens with the price action in the short term, which is just noise in my view. Midterm and long term, we have a massively huge energy crisis that I think most people don't understand. And I think that as the market comes to realize what we've been talking about, repricing of these things is going to happen. I've got a company in the portfolio that's generating so much cash. They laid out their policy. If they get the debt down, which they did, down to a certain level, they said they would return 25% of free cash flow to shareholders via buybacks and dividends. Then they laid it out. When we get to 50% of total debt, then we will increase or we get down to this other debt level, not 50, we will go to 50% cash flow. And then we get down below this other threshold level, which they're moving rapidly to, we're going to return 100% of free cash flow to shareholders. Not we're going to return 75% and then go drill more. Not we're going to return 50% and go buy our competitor. We're going to return 100% of free cash flow after capital expenditures to maintain production to shareholders. And that is the theme across the industry. So don't expect this huge investment boom. Yes, we will see, but then people, I've talked about this before, what about oil field services? They're still going to boom because the industry shrunk so much that the capital that's still going to come to it is going to be sufficient to cause a boom. And eventually prices will stay high long enough, and then people will begin drilling again. But that's down the line. That's just not something that's going to happen in the next month or two. So again, we stay long energy, and the areas around energy. Yes, some special situations we've had in the portfolio that have worked out, and some longer term investments that we're going to be adding that look good after this pullback. So run by good managements with good businesses. So I feel pretty good about the newsletter and the portfolio. I think we've done a good job, and we'll continue to do that. So if you're interested, check it out in the show notes. That's it for this week, guys. We will talk to you next week. We've got 3 months, the big push. We're like 9,580 subscribers. If we can just 420 subscribers push through that 10,000 barrier, that would be like my goal for the rest of this year. We're starting to get views now around high 4,000s per week, 5,000 people per week viewing these videos. So if you like these videos, share, like, subscribe. That helps my channel. And like I said, you can subscribe to the newsletter. That's good too. But about 80% of the information I put in these videos is what's in the newsletter. I just don't give the names out here. So that's it. Thank you, and we'll talk to you next week.